clients and my realtor partners and any homeowners out there that see this video. We're going to post it up on our YouTube channel. And the reason I wanted to do this video today was because insurance costs are expected to rise close to 30% in Texas this year. And I'm already seeing calls from clients saying, hey, my escrow account went up, and we start looking at it, and it's the taxes and it's the insurance. And in some cases, there are big increases that were unexpected. And so I wanted to bring in Ryan Baker. This is my son, Ryan. He's with Goosehead Insurance. Goosehead's my preferred carrier. And I wanted to also give a little background on this. So I've been working with Goosehead for 10 years. I started with Will Prassis. Will's amazing. He handled all my clients, and he eventually got promoted to managing director. And right before that happened, during the last few years of that, before he got promoted, Ryan had gotten into insurance after getting out of school. And when he was finished with college, he decided, instead of doing a master's program, hey, my master's is going to be, I want to learn the insurance business. So he did healthcare, commercial, life, and property and casualty, to not only learn it, but to see which one he really wanted to focus on. And he ended up doing property and casualty and life. And when Will got promoted, he recruited Ryan. So Ryan is now handling the book of business for myself, my clients, and Goosehead. I use them personally. About 95% of my clients use them. And I wanted to say this, I've spoken at their rallies and investor meetings, so I'm a huge advocate of Goosehead and their process. I love the company. And I get no financial incentive. So I don't get a referral. I don't get a gift card, nothing. What I get from them is they give my clients great advice and the insurance they need. And as a mortgage advisor, I'm looking at your overall financial plan, and this is a key part of it, to be the lowest cost coverage from a cash flow point of view, but to be correctly and properly insured in the event you need it, because that could be a huge loss if you're not. So starting out, we want to, Ryan, go ahead and talk about why have insurance costs risen so dramatically?
So there's a couple of big driving factors here in North Texas, why insurance costs are on the rise. The first one, and this is the biggest one, is inflation. When you look at everything in today's world, it has increased for the most part. Insurance is no different. It's costing more to rebuild your home or repair your home if there's a claim, and it's the same thing for your car. If your car gets totaled, it's costing a lot more on labors, the supplies, and everything. So insurance companies are having to charge more at the renewals. And then additionally, the second big thing here is we have a lot of claims here in Texas. So whenever you see a wind or hailstorm, you know someone in your neighborhood just filed a claim and used their insurance. That drives everybody's insurance up. And just to give you an example, we got big carriers like State Farm. They just reported in 2022, they had a $6 billion net loss. So that's going to be trickled down into everyone's renewals moving forward.
And we get a lot of clients that ask this question. And we've had, you and I've had two of them the last couple weeks, really the last month, where they were upset, not at you or I, but they were venting, right, about how come my increase, my one went up so high and I didn't even do anything. And I think actually both those people, one was, I don't even think either were existing Goosehead clients, but they were just mad. I think one was a new homeowner coming in complaining about it, and one was doing an investment property. But so this affects everybody. So in other words, it doesn't matter if you've never had a claim. When there's a lot of claims, we have population growth, we have inflation. It's going to, across the board, going to affect everybody.
Yeah, that's exactly right.
Okay. So let me ask you this. So we're going to go to some details of what you can do to lower your premiums and get adequately insured. And the first thing I want you to talk about is, what's the difference between actual cash value and replacement cost value? And where do you want to make sure you have that? And what is it?
Yeah, so actual cash value is going to be factoring in depreciation on your belongings and your roof. So we want to avoid this when possible. And then replacement cost is going to be actually paying out to replace your roof at what it's worth. So great example here is, let's say that you were a new homeowner 5 years ago and you get set up with your insurance, but they don't go over, what's covered and whatnot. So you end up having actual cash value, save a little bit of money on the premium. So now you have a roof claim 5 years in, and that roof may have depreciated, 50%. So now the payout is way lower, and it's just more out of pocket for you that you weren't expecting. on replacement costs, it doesn't matter, that it was a 5-year-old roof. It's going to be taken care of, minus whatever your deductible was.
And I see that's probably the number one example. I see that all the time. It's not so much of my own clients, because most of them are have the right insurance, but I do see it quite often with people that are selling their homes, and then there's an inspection done, and then the roof needs to be replaced. They turn in their insurance, and then the seller ends up having to pay a much larger claim because they had actual cash value. So to put it in terms of numbers for everybody listening, let's assume that it costs $30,000 to replace your roof, and your deductible is $3,000. Then you would get a check for $27,000 that would cover it. That's the way you're thinking. Most of you probably think, hey, that's the kind of coverage I have. But if you have actual cash value, they depreciate the roof, meaning they lower what they have to pay you based on the fact that it's an old roof. So you'll get a check. They'll say, okay, it was $30,000 minus your deductible. So it's $27,000 minus 50% depreciation. Oh, here's your check for $13,500. And then guess what you have to do? You have to pay $13,500. And that's why a lot of times you see homeowners defer that until they go to sell the house, but then you end up having it eats into your net proceeds in the sale. And all that could be avoided if you have the right coverage. So what can people do to lower their premiums?
Yeah, so the best starting point is to talk with a agent like myself. Reason being is I work with more than 40 different insurance companies. So if you get a high renewal, we'll do a deep dive. We'll look at your situation. We'll look into bundling, whether that's your home, auto, if you have investment properties, life insurance, umbrella, travel trailer. There's literally nothing that we can't insure. So we'll look at every avenue to see what we can do to bundle and get all the discounts you qualify for. But that's going to be the starting point, because a lot of carriers, I know we'll touch on this here in a little bit, but a lot of carriers will only have access to their products. So that's when you're looking at like a captive agent. When you get a renewal and it's higher with a captive agent, your only options are you take an increased deductible, whether that's on your car or your home, so more out of pocket for you to just use the insurance, or you have to start losing coverage to make up the difference, which is not going to be recommended. So the first route I would recommend is chat with someone like myself, because we'll make sure you have the right coverage in place. But out of the sheer volume of carriers we work with, you most likely come out with better coverage at a better price.
Right. And that's one of the things. So the captive agents are the big carriers. And I've always felt like the big carriers have a massive budget for legacy media advertising, TV and radio. And I've always felt that shows up in higher rates, only because anecdotally, I see that all day long. Every time someone brings me in a quote, when we first start the process of a new home purchase, because that's usually when we meet and introduce them to you, is usually a way higher premium. So I've always felt that that's the reason why. And that's important, guys. We're like, they're just adjusting your coverage. You're lowering your coverage to keep your costs down. Well, there's a more effective way to do that. So talk to them about the way to maybe structure deductibles, what it means to be a little bit self-insured a little bit if you take a higher deductible, and to try to get that premium down.
Yeah. So that on your home insurance, the deductibles are one way that you can effectively lower your premium. I'm always going to recommend a 1% if possible. So if there's a carrier or a company that is offering 1% and they're a great carrier and it's a better price or it's competitive, we'll try to go for the 1%. But there are situations where folks will opt in for a 2%, but you just got to be aware of the risk. So how deductibles work on the home side of things is they're going to go off of percentages. They typically go off of percentages of the dwelling limit, or what the insurance company is actually insuring your home for. So if we have your dwelling limit at $500,000 and you're at 1%, you have a $5,000 deductible. If you go to 2%, you have a $10,000 deductible. So it's double the out of pocket on your deductible if you need to use the plan. But folks are self-insuring. If you have the cash to take care of the first $10,000 and you've never seen a claim, that might be an option to look into. But usually we want to go for 1%.
Yeah, and I could say from an advisory point of view, there are certain cases where when you're first buying a house where maybe you need a little lower payment that first year to get adjusted, and you could take a little bit more of a chance by having a little bit out of pocket, because it's still, if you have replacement cost coverage, you're actually still going to be, it just means a little bit higher out of pocket. So it's a little bit more exposure. So that's usually one thing we look at from my side of the aisle. The other thing too is I do have people that have great liquidity, but would like, meaning they have plenty of cash, but they like to have a lower monthly overhead, personal overhead, personal bills. And we do have clients to look at the 2% from that regard and say, hey, I'm willing to self-insure, because that's basically what you're doing. You're self-insuring for an extra 1% in exchange for a better premium, knowing that the odds are I probably won't even use it, and they would sort of play those odds. So those are some options, and they're good options. And like Ryan said, is that if you know the risk. And the thing I see, and we really haven't covered this, but let me give you like what I see people do. I see most agents as being where they're rate quoters. And so for most of you listening to this call, if you're not already working with Goosehead, you probably don't even know all the different levels of coverage you have. You can look at your declaration page, but do you know what they mean? And you know where you might be able to adjust them to increase or decrease effectively. So there is a way to adjust them, like Ryan was saying, to make sure you have the right insurance and still maximize the cost if it's done right. And I very, very rarely see an agent that does that. They're just not trained that way. So the last thing I wanted to cover is the aspect of life insurance, and life insurance from the point of view, just as a starting point, to cover the mortgage in case something happened to your partner. And when you buy a house, one of the things that happens is when you first move in, and for all of you will remember this, you'll get a bunch of solicitations in the mail to do your homestead, and you'll get these letters about like home mortgage insurance that, hey, we'll have insurance to pay your house off. And really what they are is life insurance disguised as, sold in a different way, but it's just life insurance. And so we really encourage our clients to have that conversation at the beginning. So talk about a little bit about how to like get an affordable life insurance solution for for at least your mortgage in the event something happened to you.
Yeah, so the life products that I always recommend for home buyers, especially first-time home buyers, because typically we're coming in, we don't have life insurance, or if we do, it's through an employer, is you want to chat with someone like myself, and we want to get you set up on a term life policy. Ideally, it's going to be either a 15 or a 30-year term. That's a conversation we'll have. Varies on the individual, but we want to make sure that we're at minimum insuring and covering you for the loan amount. But when you go through your own life policy, you actually own your policy, so you're able to customize it. So we cannot just do the loan amount, but if you have like student debt, or you have any outstanding debt that you want to take care of, or you want to package in like final expense or loss of income to help your family in the future, then that's something we can do. But one thing I see a lot, especially with first-time home buyers, is I'll ask, hey, do you have anything in place for your life insurance? And I'll usually hear like, oh, I have something through my employer. And a lot of us do, and that's actually really great. I have one through my employer, and I love Goosehead. I don't plan on going anywhere at any time. But the catch is that, let's say, if you've ever changed careers or switched jobs, a lot of us have gone through that before. When you have it through work, that's considered a benefit. It terminates when you leave. When you have your own life policy, it stays with you. It's not going to it's not going to,
you take it with you, right? So you can be self-employed. You can decide I'm going to open my own business. You still have your policy. As long as you pay your premium, you have your policy. You switch employers, you have your policy. The other thing, doesn't it stay on the term? Because there's always like a debate of whole life. Because if anybody sees this video and says, oh, and they sell whole life, they'll attack the term policy for whole life, but because it has a cash value. But guys, over the years, I've looked at a lot of assets. I can tell you, like when you look behind the curtain, so to speak, like the Wizard of Oz curtain, those whole life policies, most of the cash values I see built up are minimal or negligible compared to what they put in. But the term though is it's more affordable too, right? In addition to being affordable, it's fixed. So if you're younger and you get a small amount, does that stay fixed the whole term?
Yeah, I mean, most of the time, what I'm seeing, especially with folks in their 20s and 30s, is you're probably looking at about $25 to $40 a month, depending on what plan you opt into and coverage, what coverage you opt into. But it's relatively affordable. But the catch is that it stays that same premium amount for the term plan for the entire term. So it's not going to jump
Yeah,
up on
that's
you.
the big thing right there. That's the thing. If you're, you can lock it in for the long term, and you're not subject to inflation and rate increases and all that, and yet you still get that value out of it if something, God forbid, something happened to you. So that's something that we've integrated into our process as an advisor. Is like when you're going through the insurance, but it's not a hard sell or anything like that. It's the process is exploring a discovery call to explore where you're at, explore what you're doing, and then make recommendations, and then you would make that selection. So Ryan, so if anyone needs to get a hold of you, for those listening that would like to reach out to you, maybe do an insurance review, take a look at what they have. What's the best way to reach out to you?
Yeah, so just give me a phone call. So phone call, email. I'm available nights and weekends. I say, if you can, grab a copy of your declarations page for your current home and auto. That way I can review, make sure we're coming in with the right coverages, and then if we need to make any changes, we'll look at making those changes. But really it's a quick phone call in the beginning. We'll just do a quick needs analysis, run through, I'll learn about your situation, and then I'll get working on shopping between our 40 carriers to see what we can do there.
Great. And then, so what's your email? What's your phone number?
So my phone number is 214-427-6838. And then my email address is all lowercase. It's ryan.baker@goosehead.com.
And then what's your Gmail? I love your Gmail one.
Yeah, so Gmail is saferwithbaker@gmail.com. So if you can't remember the other stuff, remember saferwithbaker@gmail, and I'll get in touch with you.
All right. Well, appreciate it. You guys, hope you found some value in this information of how this works. And like I said, you reach out to Ryan if you need some assistance. Have a great day.